All right, let's talk about crypto, because if you've been watching the markets, you know the last week was a pretty big deal. After things were kind of quiet for a bit, prices just took off. But the real question is, was this just another blip on the radar, or is something deeper, more fundamental, starting to change? Today, we're going to unpack the powerful forces that drove crypto's big comeback. Let's get right into it.
Okay, so let's start with the headline number, a 9% surge for Bitcoin last week. Now, I know in the wild world of crypto, 9% might not always sound like a huge deal, but trust me, this was different. This was one of its strongest weekly gains since way back last year. This wasn't just noise, it was a real statement from the market.
And that surge pushed Bitcoin right back over that super important $71,000 mark, which puts its all-time high right back in its sights. And this wasn't just a Bitcoin story. Ethereum jumped 6%, and you could just feel the entire vibe of the market shift. It felt way more optimistic, more confident. The momentum was definitely back. But look, a rally like this doesn't just happen out of nowhere. This wasn't some random market mood swing. It was driven by really tangible, really important shifts happening behind the scenes in both finance and regulation. So what exactly were those key forces? Let's break down the three main drivers, one by one.
First up, and you could argue this is the biggest driver of them all, was a massive flood of money coming in from Wall Street. Seriously, to understand why prices jumped, you just have to follow the institutional cash. And last week, that cash came roaring back into the market in a huge way.
The key word here is consistency. For the first time in months, the U.S. spot Bitcoin ETFs saw net inflows for every single day of the trading week. That means more money was coming in than going out, day after day after day. That is a crystal clear signal of renewed and, more importantly, sustained appetite from the big players.
And just look at the sheer scale of this. In total, those ETFs pulled in a staggering $7.67 billion in 1 week. To give you some perspective, that was the strongest week for these funds since they first launched. The institutional money spigot was officially cranked all the way back on.
And who's leading the pack? Well, no surprise here. It's BlackRock. Their IBIT ETF just vacuumed up the lion's share of all that new money, cementing its spot as the #1 vehicle for institutions. When the big money decides to get into crypto, this is where a huge chunk of it is going.
But here's the thing. That flood of money didn't just happen in a vacuum. It was unlocked by something maybe even more important, a really positive shift in the regulatory world. It looks like Washington is finally starting to provide some of that much-needed clarity, which is exactly what big investors have been waiting for.
So a super key development here is how regulators are even classifying these assets. The SEC seems to be leaning toward treating Bitcoin and Ethereum as digital commodities. Now, this sounds technical, but it is huge. Regulating them like gold or oil instead of like a stock is a massive, massive win. It gives institutions a clear rulebook they actually understand and feel comfortable with. You have to understand, this is a night and day difference from the old way of doing things. We're moving away from a world where different government agencies were kind of fighting over who was in charge, which just created a ton of confusion. This new path is a unified one, with a single clear set of rules. It basically ends the regulatory tug-of-war and creates a stable playing field for everyone. And you know what? This isn't just a US story. We're seeing this trend towards clarity pop up all over the world. You've got Australia moving forward with a national crypto framework. You have the SEC here dropping some high-profile lawsuits to focus on bigger, market-wide rules. Regulators globally are finally starting to sing from the same hymn sheet, and that is an incredibly bullish signal for the long-term health of this whole industry. Okay, so with the money flowing in and the rules getting clearer, how are the big institutions actually behaving? Let's take a look at the actual market moves, because it's this fascinating mix of really strong buying pressure on one side, but also some pretty big headwinds on the other. A perfect example of this conviction is this Japanese firm, Metaplanet. They just locked down 255 million yen specifically to keep buying and holding Bitcoin on their company balance sheet. The market is literally calling them the Asian MicroStrategy, and it just goes to show this powerful trend of corporations treating Bitcoin as a legitimate long-term reserve asset. Now here's a little data point that might have flown under the radar, but it is so important. Last month, for the very first time, the transfer volume of USDC, that's the stablecoin known for being super transparent and regulatory friendly, it actually surpassed its bigger rival, USDT. What does that tell you? It reflects a clear preference, especially among institutions, for assets that are built for compliance from day one. But it wasn't all just one-way traffic. We got to look at the other side of the coin, and that's token unlocks. Last week, about $171 million worth of tokens were unlocked for various projects. Think of it like this. An investment vesting period ends, and suddenly early investors and team members can sell their shares. This creates sell pressure on those specific coins, which can act as a headwind pushing against the broader market rally.
Okay, so let's zoom out. Let's talk about what's next. All of these things we've talked about, the money, the regulations, the market moves, they're all feeding into these bigger stories. These narratives that are probably going to define the entire next chapter for crypto.
I mean, you really don't get a much bigger voice in the world of investing than Stanley Druckenmiller. And when a legend like him says that stablecoins could become a crucial piece of the world's payment infrastructure, people listen. That adds some serious weight to the idea that stablecoins aren't just for trading anymore, they're evolving into the payment networks of the future. And of course, we have to talk about AI. The AI boom is sparking this really fascinating new debate. Will the absolutely enormous energy needs of all these new AI data centers compete directly with Bitcoin mining for power? Or could this incredible new demand for electricity actually drive massive upgrades to our energy grid that end up benefiting both ecosystems? It's a huge question.
And all of this brings us to our final thought. We've seen the institutional money finally pour in. We've seen regulators shifting from just enforcement to actually creating a clear rulebook. So the big question I want to leave you with is this. Are we finally witnessing the end of crypto's Wild West era and the beginning of its maturation into a legitimate, mainstream asset class? Something to think about. Thanks for tuning in.